Hey everybody, Tim Knight of course, and I think I'll just do one more post for the whole day and just hang it up until Thursday morning. We had a couple of big earnings tonight, Nvidia and Cisco. Last I checked, they were both up a little bit, nothing dramatic. It was a good day. It was the first trading day I've enjoyed in what feels like a very long time. But I thought I would do a quick video with just some broad catch-up. And here we go. And I'm actually going to use the Thinkorswim charts as well as slope charts. Thinkorswim just briefly. Here we have the ES, basically for the entire bear market. In other words, for the past year. And the good news is that it's been a very clean, obvious bear market. You know, lifetime peak, lower high, lower high, lower high, and God willing, lower high. And lower lows. I'm not crazy about the fact that this lower low was kind of modestly lower. This was a steady, I haven't drawn a line, but you can, in your mind's eye, see a line go down. This was a lot more shallow. But ever since this day, it's been a hell on earth for bears, pretty much. And we seem to have exhausted that yesterday, God willing. But jury is still very much out. This is on a 4-hour chart basis. And this is kind of what I'm watching right now. You can see this on the 1-hour chart, the 30-minute chart, even the 15-minute, maybe even the 5, let me find out. Yeah. So this is the man of the hour right now. This line, I think, does a pretty decent job of showing where support is. And I think a good representation of that is, I mean, let's face it, for a short while on Tuesday, it looked like World War III was going to break out. You know, on the surface, it's like Russia has fired missiles into Poland and has killed people, you know. And so the Associated Press rushed that story out, and which they've retracted because it wasn't any of that stuff. It was a Ukrainian missile that just screwed up and went to the wrong place. But what I'm saying is, in that trauma, that's as low as they could pound it. And today, they got, how close is this? Let me just look real close at my screen here. 3962, they got 2 points above it. That was the low for the day. So I would just emphasize that this is a pretty important line, 3960. And if we break it, it opens the possibility of undoing some of this stupid CPI rally, which sucked, this whole thing. The more we can blow that away, the better. We've already long dispensed with the PPI from yesterday. That's a distant memory now. We've thrown that right in the trash can. We've got to get rid of this sucker right here, idiotic thing. So that's kind of the futures situation. As far as the indexes on a daily basis goes, let's just look at a few items here. Some of these I'll blow right through, some I'll say a few words on. Here's the NASDAQ Composite. This is a little bit encouraging. We may have a failed bullish breakout on our hands because we had this bullish formation, which completed here. But it's gotten awfully wobbly and we're below it. We closed below it. So that may have petered out. It's still a messy chart, very range bound, but you know, that would be a nice little victory. The Indu has rallied in a very short amount of time by how much? This bottomed at 28.6. It peaked at about 34. What's that, like almost 6,000 points? You know, great valuation of a doomed economy, guys. Anyway, yeah, 6,000 points for nothing, based on nothing. As long as we stay beneath this lower high, that's fine. Boy, we got close to it, but we've eased back a little bit at least. We have unfortunately pushed above this descending trend line, but the key is to stay below this sucker. NDX, not too different, of course, argument than we had with the Comp Q. Still very range bound. We've got all this room to play. So we could take a nice hard tumble here and still not have a bearish victory lap. because we've got a lot of support down here, but it would be nice to melt some of this off. But right now we're range bound. This Fibonacci here and this peak right here. I was kind of hoping for an NVIDIA wipeout, but that didn't happen. I don't have a position in NVIDIA, but that certainly would help the argument, but did not take place, not yet at least. Kind of a mess on the S&P 100, nothing much to say. Also kind of a mess on the Russell 2000, although on a long-term basis, this Fibonacci's done an okay job of bounding in prices. We have been sloppily within this range since April, as you can see. Down, up, down, up. Maybe that's about all she wrote. Who knows? Let's see if a trend line works there. I use this automatic trend line way more than I ever thought I would. Yeah, that's pretty neat. You know, so far so good there. That looks pretty clean. So let's give that a different color just to distinguish it from the Fibonacci. The socks is like so. Let's inch that up just a skosh to take in yesterday's high. But this is long-term support. And this is the top, which we violated a little bit in the summer rally. And we've retraced back to that line. Here's the S&P 500, all the way back 122 years. And looking here, you can see once again, the sharp series of lower highs was muted with this most recent bottoming and went ripping higher like so. So we're in kind of a no man's land here. These Fibonacci's and the shorter term Fibonacci's have been a little bit helpful, I think. We can see here this nailed the bottom almost to the exact point. But recently, these two retracement levels had clung to prices quite tightly here. Prices have clung to them more accurately until that stupid CPI rally. So now we're way up here again. So once more, if we get a nice hearty sell-off, I don't have great expectations, thank you Charles Chickens, for this, except to at least get us back down to that 38, the low 3,800 level where we had been kind of stuck. Here's the Dow Transports. Not terrible. Lower high still in place. Looks pretty good. Utilities, kind of a bore. But this is a pretty decent delineation between top and bottom action. That sounds kinky. Here's the VIX. We're clearly rather low. We're clearly not in sort of bearish frothy area. That is the mid 30s when things are real frothy in bear land. As it is now, we're just ambling around the lower 20s. But this very big basing pattern, which is not complete, is at least still, you know, the dream's still alive. Gold had been strong for a couple of weeks. I think it's done. I think silver, gold, and the miners are done. That's nothing. This is kind of interesting. This is the XMI, the major market index. Again, as with the utilities, we've got a pretty cool little delineation here. Here's all this overhead supply. And I realize there's a lot of piercings down here, but this captures the peak of that 2-month rally. I think that's not a bad guide to show where the rally is pooped out. And the XOI, kind of interesting. We had a lifetime high a couple of days ago. We're starting to get pretty frazzled on that. So I've been tiptoeing into some energy positions. I've got 28 bearish positions now on the energy side. I've got ConocoPhillips and Schlumberger puts, as well as Murphy Oil puts. I think that's it. I think those are all the energy ones that I've got. I guess, did I say I don't think I said Halliburton. I've got that as well. That's energy related. So yeah, a smattering of them. Okay, 10-minute mark's coming up. I hope that's helpful, and I'll see you on Thursday.